Alrighty everyone, welcome back to a new video. I hope you guys are having a good trading week. This video marks the very first video with the Top Step challenges that I bought, just to show you guys proof that you're able to make money with these prop firms and you're able to pass them with proper risk management and taking high quality setups. So let's get straight into it. So first thing we do as soon as we get into the charts and we start analyzing, we're looking at the higher time frame. So with me, as soon as I got on the charts and I was doing a quick analysis on developing a bias for the day, I just knew that we were going to be bullish, and one, that was because of the candle closure. So as you could see here on the daily, we Monday we had a nice strong closure. Tuesday we also had a nice strong closure, and then Wednesday today I saw that we filled in this very low wick here that took out previous day low, and we were in expansion when I was waking up. So I just knew coming into the day that there should be no reason for us to go to the downside, especially with the size of this wick, because all the liquidity that's been has already been taken out. We had Monday's low and Tuesday's low both taken out. It was equal lows that were formed that day, and we took them out perfectly, and you can see by the wick how strong we reacted off of it. There's no reason for price to go to the downside because everything else is high resistance liquidity, and to me personally it didn't make sense for price to open up and we're in expansion at 24,800 range to then drop all the way down to these kill zones and pivots here. To me, it just didn't make sense. So I knew today we were bullish. So now, after doing a quick little daily profile and looking at candle closures here, one more thing to note as well too on why I was also bullish is, like I said, we took out equal lows from Monday and Tuesday, but we also tapped inside this 1 day bullish fair value gap that we've also been respecting since last week. So that just gave me more confirmation. So now going down to a lower time frame, I've been liking the 6 hour as of recently because I'm just paying attention to 4 candles that complete the day, and to me it's just been easier, and it's been pretty helpful with developing a stronger bias. So as you can see here, we had a 6 hour fair value gap here that we filled up entirely, and you can see here this 6 hour candle during London filled in the low of the day, and London's candle, we closed inside this fair value gap. So that just shows me that the order flow for the market is bullish, and I know that New York is going to expand because London, I anticipated that it was manipulation, and it set the low of the day because of this candle closure closing inside of the bullish PD array. When we're respecting bullish PD arrays, order flow is bullish. For instance, if the order flow is bullish and we're tapping into bullish PD arrays and we're not respecting it, then that can give you indication that order flow is changing and we're turning bearish. But in this instance, we were respecting bullish PD arrays, so I knew that we were bullish. So then now I'm looking at the 4 hour just to get more confirmation, and we're respecting all these levels. So now I'm just waiting till market opens to find my entry, target specific liquidity zones or imbalances that make sense, and that's it. So as market's about to open, I mark out the true session open, which is what I'm trading, the New York AM. So that's 7:30 a.m. for me. And I marked out the true day open, and then I have the true weekly open marked out during the start of the week once Monday's range is finished and developed. So as we could see here, like I've said in previous videos when I spoke about quarterly theory, and how to know which SSMT is higher probability is when SSMTs are created below true open prices. But not only that, even higher probability is when they're also made after liquidity sweep and also with true opens being stacked together. So as you can see here, price is below true weekly open, but not only that, we were also below true session open and true day open. We have true weekly and true day open stacked on top of each other, and we also had true session open and true day open stacked on each other. So that just showed me that we were at an extreme time discount, and it was time for price to push up to the upside. So let me replay this back for you guys to So as you can see here, we were consolidating for a bit before market open. So I'll play this a bit. So boom, as soon as market opened right here, we just instantly ripped up. And originally, we did have this first 90-minute SSMT. But with me, after this candle ripped, usually if we're bullish and the 9:30 candle opens and rips, that's usually manipulation, or people like to call it Judah swings, when they're just pushing price in any direction to just garner liquidity so then they can make the real move going into 10 a.m. And the one thing that I knew is, off this 9:30 candle opening and we're just ripping up violently, one thing, let's say for instance, if price rips up at 9:30 and it hits my drawn liquidity for the day, and I didn't get an entry or anything, then I'm fine with that. Because one way I like to look at it is, if price hits my drawn liquidity for the day, or what I'm specifically targeting, then that day it wasn't my turn to make money, and that's simple. That, I feel like that's how I've been looking at it when price doesn't give me my entry or confirmation or anything, and it just rips without me. I just view it as it wasn't my turn that day, and I move on, and that's it. Because as a trader, you're supposed to be an opportunist, and you're supposed to be optimistic as well too, because in this game you're playing it for the long term. There's opportunity every day. You should have an abundant mindset when you're coming in here. So for instance, if you have a break even day because you fucked up, or if price just rips without you and it doesn't give you your entry model, it is what it is. At the end of the day, you didn't lose money, so it's still a green day. And secondly, give yourself a pat on the back. You were right on probability. It's just your entry wasn't there, and that's it. It is what it is. You always have the next day to capitalize. Because for instance, let's say you didn't make money yesterday, but then today comes and your entry model presents itself and everything plays out in your A plus setup. Boom, now you just made money for the previous day and today, and that's it. You shouldn't view it as trying to make money every single day. You should just be making money on super high quality days. It's quality over quantity in this game, always. So back to the analysis here. So originally we had this 90-minute SSMT, but I didn't really trust it that much. Like I said, we had 10 a.m. news coming, and okay, for instance, let's say if price kept ripping up and 10 a.m. news happened, and 10 a.m. news was just straight continuation, because usually if an SSMT forms before 10 a.m. news, that just gives us like an indication that news is going to be bullish. But with me, I wanted to wait for the 10 a.m. just to be safe. So I would have, let's say if price kept ripping up and it didn't come towards my SSMT fill or my T-Sys entry, then I'll just look for a quick continuation and target like a quick 1-to-1 to just capitalize and make some quick money if my drawn liquidity has not been met. But if my drawn liquidity has been met and the 10 a.m. candle opens and it just rips and it doesn't fill in a wick or anything, then like I said, it wasn't my turn to make money, and that's it. So we had this 90-minute. I didn't trust it. As you can see here, we let price play out. Boom, boom, boom. And then we created a new 90-minute SSMT right here. And then on top of that, we also created a hidden micro SSMT on top with ES. ES had this 90-minute SSMT, but like I said, I didn't trust it. So I waited till 10 a.m. or when 10 a.m. was pretty close into happening. And then we also had a hidden micro SSMT. Micro SSMT is just the 90 minutes divided up into 4 quarters. So it's 22.5 minutes within 90 minutes. So 22.5 times 4, that equals up to 90 minutes. But what a hidden SSMT is instead of you looking at the highs and lows and marking out an SSMT with the wicks, instead you're marking it out with the body. So here you could see that we took this out, and technically off the wicks we made a lower low. But if you look at the body, we still closed above and we created a divergence, but it was just hidden because we're using the body closures here. Because remember, the wicks deal the damage, but the body tells a story. And with me, this made sense to take. Not only that, because if you look on the 5 minute, because if you have a 90-minute SSMT, you have to wait for a 5 minute confirmation. Look at this big dump that we had here. My confirmation I would have had to wait till roughly around 10:30 for the T-sys to confirm, and then for us to tap back into it to then target higher. And I'm not gonna wait till 11 o'clock, me personally, because we're getting closer into lunchtime, and lunchtime price action is bad. It's usually choppy consolidation. That's when they're just chopping traders out and stuff like that. With me, I'm not looking for that. So instead, I knew we were bullish, so I wanted to capitalize on it, and I was looking at it on a microcycle and trying to capitalize on it on the 1 minute, because at the end of the day, I'm a day trader. To a certain extent, you can say that I scalp a bit, since obviously I'm trading the 1 minute. I'm getting in and out within roughly 10 minutes. So boom, hidden micro SMT. ETH made the higher low, and NQ made the lower low. So boom, 1 minute here, we have a T-sys right here. We created as we push up here. Let's play this out. Boom, 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 boom. So, alrighty. So here, this isn't an SSMT fill. I don't know why I marked that as SSMT fill actually. We can remove that. This is just a regular inverse fair value gap that I was watching. So we inverse this, but like I said, I was waiting for the 10 a.m. So I didn't trust the fair value gap just yet, because we were so close to 10 a.m. news that I didn't want to enter in the trade, and then 10 a.m. happened, because 10 a.m. 10 a.m. usually forms AMD, or if you're using the 10 a.m. it usually uses the power of 3, which is AMD. So, we have accumulation, then we have manipulation where we fill in the wick, and then we'll have the distribution. So I just waited till 10 a.m. news came out. 10 a.m. news came out. I waited a couple seconds as price started developing. I waited till this candle closure on the 1 minute form, and I saw that we had two super large wicks respecting this inverse fair value gap on the 1 minute. Once I saw the size of those wicks, I just knew order flow was super bullish. There was a lot of orders here to get filled in to push price higher. So once I saw that, I waited till this candle closed. Boom, I got in. After that, we had this 1 minute BPR. I knew as soon as we flipped this 1 minute BPR, price was ready to go, because BPR is when two fair value gaps are overlapping each other, and BPR just stands for balanced price range. BPRs are by far, I'd say, one of the highest probabilities when it comes to expecting price to like bounce off and respect. And the fact that we disrespected a bearish one, I just knew price was just primed to go up. So boom, as you can see here, I placed my break even on this internal high. I had this BPR mark that we disrespected. As soon as we hit this internal high, I moved my stops to break even. I was just targeting this local high right here. Like I said, I'm going for quick base hits. I roughly like to target minimum 1 to 1.5 RR, max to like 1 to 1 to 3 RRGs. Yeah, on like a good day, for instance. But usually I like to get minimum 1 to 1.5. So yeah, as you can see here, we'll play this trade out, and price hit it perfectly fine. 10 a.m. happened, filled in the wick, we're in expansion, out the trade. Got in the trade at 10 o'clock, took roughly almost 18 minutes, made some nice money. And yeah, that's it for the trade. One thing to note as well too, just to give you guys a tip on other levels to targeting unmitigated 5-minute gaps and 15-minute gaps are very powerful, because like I said, the market looks to make the market efficient, and imbalances are inefficiencies. So the market is going to target those imbalances to fill those gaps to make it efficient, and us traders, we're just trying to get into that wave and target those inefficiencies so that we can get out on the trade and capitalize. But not only that, another price point that you guys can also target, just a tip, is flat candles. If you see that a candle has printed and there's no wick, that's a flat candle, and that's usually an inefficiency with the candle, and that's usually a magnet for price to target. I'm not saying for you to get in here and we have one that's 100 ticks away. Obviously, do not target that, because that's unrealistic for the time frame that you're trading. But let's say, for instance, it's within your liquidity target, the volatility for the day. You can target those levels, and price will usually, it's a pretty hard magnet for price to go and target, which is nice. Just other liquidity levels that you can look at here. But yeah, that's just the trade for today. Played out perfect. Textbook trade, A++ setup on my end. Another thing you can look at too here, if you go on the 6 hour, and let's say you're looking at it on the range, just to measure out, premium and discount here. Let me just quickly change this. Mean threshold. So boom, like I said, London came in, set the low of the day, but not only that, it respected the dealing range within this low and high that we created. So that was also another confirmation as well for me to target higher. And yeah, price played out perfectly to the T, and that's it. I got my piece of pie. I wasn't greedy. There's no reason for me to target higher, because at the end of the day, those base hits will get me farther than me trying to target home runs. I'll have my days where I target home runs, but the base hits is what will set me up for longevity in this game. And just to show you guys proof, this is what I made. The other two funded accounts. You're probably wondering, like, oh, why does it only say 403 in the account? I took a trade on Monday, but I didn't record it because I was just testing out that day. Usually I don't trade Mondays too much. I have been getting into the groove of it because I knew I was going to start this series. I lost like almost $400. And I didn't want to post it because price action was pretty choppy and it wasn't the best setup. So I just thought that it wasn't worth posting for the YouTube video, because I want to post quality losses and quality wins just so you guys can learn a lot more, rather than me just going in and it'd be just a quick trade recap and I'm just like, oh, I just got chopped out in price action, boom, that's it. No, I want to give you guys good quality trades and content just so that it makes sense for you guys and you guys understand why price moved that way and why certain things happen and why we have that price delivery during this time frame. But other than that, this is the first episode. Many more to come. Let's keep on going until we pass these funded accounts. I'm gonna be as transparent as possible. Tell you guys how I feel. Give you guys tips in between the videos if it comes to psychology. Any technical analysis tips. I'll answer any questions in the comments if you guys have. And then this is my Twitter here that you guys can follow. Be sure to follow Artura Finance, especially if you guys are in the crypto scene. These guys have some big stuff coming soon, and I wouldn't want you guys to miss out. So yeah, that's it. That marks the end of the video. Have a good one.